Okay, everybody, good evening. It's Angelo Christian Financial. I hope everyone's doing great on this Thursday, lovely evening. I appreciate everyone watching the YouTube live, where America goes for funding. For the last 20 years, your nationwide commercial residential lenders. Kind of zooming in here, kind of getting a close up on, so you make sure you guys can hear me and see me okay. Appreciate everyone coming on the show tonight. Every Thursday, 6 p.m. Central, we do our Talk with Angelo live. We talk about the latest things in real estate, the markets, the economy. A lot of stuff going on right now in 2022. The biggest thing right now that's the talk, the chatter, is inflation, interest rates. What do you do? Because people still need to buy a house. People still need to get loans, whether you're an investor, whether you're a developer, whether you're a first-time buyer. People are still going to buy houses. And so we have to talk about, what are the solutions, in a market like this. So that's kind of the basis of our show and our mantra, our theme for our company is coming out with, programs, ways to help people to get funding, whether they need, a lower payment or they're trying to go to an alternative loan product. Like we just rolled out another program again now, 100% financing up to $975,000. That's insane to me that we're able to offer that, but we have it. We're one of the only lenders in America that will do that, up to $975,000 loan with 100% financing with a 700 plus credit score. So we're very pleased to be able to offer that program. So the thing what's happening right now in America, as you guys can see, inflation is on the rise, and the Federal Reserve is doing everything they can to stop that inflation. They've raised interest rates again, 0.5% this week. And so they're going to keep trying to combat inflation the best they can. Now, even with rising rates, even when, lumber was going higher, people are still buying homes to build houses. So that's not going to stop. People are still going to need homes, and people are still going to need loans. We're busier than ever. It's just that some people, they may not qualify now because of having a higher interest rate, because their payment's higher. But the thing is, you have to think about is the home prices are also rising. Everything else is also rising at the same time. So even if rates are rising, home prices are rising, rents are also rising too. So your rent's not staying the same if you're renting, because a lot of people's argument is, well, I'm just going to keep renting because the rates are too high, or the house prices are too high. And unfortunately, that logic doesn't really work, because the rents are actually rising greater than the house prices, right? So it does make sense. Inflation means everything goes up, except for what usually happens is that, it is frustrating, Sandra. I agree. The thing that's why we offer construction loans too. We can help you to build a house and give you a construction loan if you're not able to, because you can find land. If you can find land, you can find a builder. You can get a construction loan. That's another solution, another option. If you're not able to to get to find an existing home, because sometimes it's very difficult. Yeah, I know. I feel you. Paying rent sucks. It's a drag. So we have to come up with different things, different ideas. You have land, you can build a house. I mean, you can absolutely build a home if you want to. We have the products to do it. We have construction loans. There's so many different things out there, and so that's the biggest thing that no matter what happens, whether interest rates go up, they go down, people are always still going to need loans. We're helping all different types of people, first-time buyers, empty nesters, people getting a divorce, separations. VA construction, there's construction loans. Yeah, so the thing about construction loans that are very powerful is your land is your down payment. If you own the land, all the equity in the land gets applied towards your down payment. So it's a very powerful program, because a lot of times you have to put 20% down if you're building a home. And with our construction program, you can go up to almost $1 million loan with as little as 5% into the deal, whether it's down payment 5% or your equity, which is your land equity. So most lenders for an $800,000, $1 million construction loan, you'd have to put 20% down, and for this program, you only have to have 5% into it. So It is. It's very great. Yeah, we can do it in Mississippi too. So it's a very attractive loan program because, like I said, normally you'd have to put, a substantial amount down, and you do not have to do that with this opportunity. So I'm very excited to be able to offer that to all of my clients. And so, there's a few things I want to talk about. The first thing is about like I said, about the market, what I think what's happening. I think inevitably, things will cool down. Interest rates will stop going up. They'll stay flat. And then you can always refinance later. You always have that ability. You can always refinance. You might buy a house right now and you might pay $300,000, and then in 2 years it could be worth $350,000. At least you built all that equity. You own the home. You can refinance anytime later in the future. Nothing is stopping you from refinancing in the future when rates come back down. They won't stay high forever. They've always kind of gone up and down. So don't let that bother you or affect you from what you're trying to do. You're trying to buy a house or whatever you're trying to do. Stay focused on your goal. You can always refinance. I've refinanced many of my properties before when rates got lower. So at least, but I own the property. That's the key thing. You own the asset. You own the property, and nobody can take that away from you. And that property could be a very valuable, piece of real estate. And that's the key thing to building wealth. You're not going to be able to time the market. You don't know what's going to happen next with the rates or anything like that. Nobody knows for sure. But the main thing is, if you find a great piece of real estate, you want to buy it, go for it. Don't stop. So, so that's that. Now moving into some of the updates I want to talk about tonight. So the Equity Builder, we have an Equity Builder loan program. It's an awesome program for you guys out there. You can buy up to $975,000 home with us with 100% financing. Awesome program. It does have mortgage insurance. You can also buy out of the mortgage insurance as well. But it's literally 100% loan, one loan. And it does require, there are a few requirements. It's for primary residence, single family home only. It does require full documentation, so W-2s or taxes. Maximum debt ratio is 43%. And you have to have at least a 700 credit score to qualify. But if you meet those qualifications, you can actually buy a home with 100% financing. There's no income restrictions. You don't have to be a first-time buyer. The way it works is designed to be and build equity fast. So it's based on a 20-year loan. It's not a 30-year loan. That way you can build equity fast in the property. So very cool product, a great solution to be able to purchase your home with 100% financing for primary occupancy only. I'm ecstatic that we were able to offer that. Just came out for May 2022, and really, really cool. I get, one of the questions I get a lot of, people ask me, Angelo, how long is a pre-approval good for? So I want to kind of talk about that. A pre-approval is actually good for 3 months. When you have your credit ran, your approval letter is usually good for 3 months. You first start out with a pre-qualification, and then you go into a pre-approval. Now, after 3 months, if you haven't found the home, we can extend that pre-approval for you, but we will need updated, income documents. We may have to check your credit again. But a pre-approval letter is valid for 3 months. So a lot of people ask me that question. I want to be able to sure I was able to answer that tonight. So if you're looking to purchase a property and you've been given a pre-approval letter, that pre-approval letter is usually valid for 3 months. Not 2 months, not 1 month, but 3 months, okay? I get that question asked to me a lot, and I wanted to make sure that I answered that properly. So another question I get a lot is, how much house can I afford? So this was for one of my clients or customers. He asked me this, that he lives in Orlando, Florida, and he was looking to purchase a home. And he said, Angelo, how do you know how much someone can qualify for? How much can they afford? How can you determine that? So I want to talk about how lenders go through the debt to income ratio calculation, and they determine how much you can actually qualify for. So the first thing is you have to understand the loan program that you're doing. Like I mentioned earlier, the Equity Builder loan has a maximum debt ratio of 43%. So first, knowing what is the program you're doing, so you can see what can you qualify for. So in this example, the Equity Builder loan, the maximum debt ratio you can go up to is 43%. So that debt ratio is everything including your current debts that you have, any debt that you have, plus your new house payment, all has to be below 43%. So let's say that you make $100,000 a year. That's about $8,300 a month, Okay, and you'd say that all your car payments, your credit cards, your student loans, everything is $2,000 a month when you add it all up, not including your rent, not including food, cost of living, utilities, any of that stuff. So if all your bills are $2,000 a month, and you know that you make $83 a month, and the program allows for a maximum debt ratio of 43%, you can kind of back your way into how much you can qualify for. So the rule that we use is for every $100,000, the payment would be $800 a month for taxes and insurance with a mortgage. So if a $400,000 home, therefore, would be $800 times 400, that would be $3,200 a month for principal, interest, taxes, and insurance on a home. So if the payment's $3,200 for your house and your debts are $2,000, that's $5,200 a month. What lenders do to determine the debt to income ratio calculation, they take your debts over your income to determine that ratio, and it has to be below 43% to qualify. So you take the debt divided by yes, it's monthly. That's right, Sandra. So you take the debt, your monthly debt with the new house payment divided by your income, your gross income before taxes, to determine how much you can qualify for. So if it's, in this example, $5,200 per month divided by $8,300, well, that will tell you that your debt to income ratio is about 65%. It's too high for this loan. So we have to get those debts down and get the debt ratio lower, either pay off debt or find a cheaper house. So you can do that math, always taking your total debt plus the new house payment and then dividing that by your gross income. And when you do that, you can determine what your total debt to income ratio is. Now, some programs have different debt ratios. Some programs have higher debt ratios. Some programs have lower debt ratios. Some go up to 50%, some 60%. So it just depends on the product that you're doing and what you qualify for. So I did want to talk about that because a lot of people ask me, how much do you think I can qualify for? And I'd say just, average debt ratio is 45%. Some programs go up to 50%. So do your own debt ratio and see where your debt ratio is at. Take your gross monthly debts divided by your income and how much the house that you want, and see what your debt ratio is. And then you can determine how much you qualify for. It's a great exercise. You get to learn about your finances and how much you can actually qualify for. So I'm sorry, I think I missed the question. Do I think home prices are going to go up or stay flat? I think that in this year that home prices are going to somewhat level off. I still think real estate, and it's obviously proven it's one of the best investments of all time, and there's made many millionaires and billionaires from real estate. But it will cool off slightly the value. I don't think we're crashing. I don't see a recession. There's no fundamentals that support that, but I think that we're definitely going to cool off a little bit. And when that happens, that house prices won't have a steep decline, maybe 5 or 10%, but kind of flatline a little bit. Stay level and flat. I don't think they're going to go up 20% this year. I think they'll flatline somewhat. And that'll be fine. There's nothing wrong with that, and it'll allow more people to step in and buy, allow the Fed to come in and lower rates again. So it's not a bad thing. I think it needed to happen because home prices all real estate was going up too high, too fast, and that's not a good thing. Okay, that's not really sustainable. So I think that it's okay, but I don't think we're going into a recession. I know there's a lot of stuff on social media about us going into a recession or crashing. I don't see it, but I'm not an expert. I don't know. I know my business, and I don't see that happening. But it doesn't mean it couldn't happen. So I did want to talk about another thing that I get a lot of questions asked me. People ask me state specific, how much income do they have to make to be able to buy a home in Texas? Or so I make $43,000 a year, 640 credit score. Yes, great question. So if you have a 640 credit score and you're making 43,000 a year, I would say, doing like an FHA or USDA, or if you're a veteran, doing a government loan would be your best bet, because it works with that credit score and has the most liberal debt ratio. With that income, you could probably qualify for, 180, 160, $180,000 home, somewhere in that price range, depending on the state that you're in. And also, I don't know if that's your gross income or that's your net income, because that will determine or influence how much you can qualify for too. And that's your gross income, I'd say between 160 to 180. Yes, but I would say look at doing like a first-time buyer loan, like FHA, USDA, VA, something like that has flexible credit requirements, and then liberal on the debt-to-income ratio. Because conventional is very strict on the credit. They usually want 700 plus, 20% down. If you don't have 700, like if you had to try to get a conventional loan with a 640, they could want 20% down. And if you can do that, that's great. But if you're not in a position to do that, then a government loan like FHA would be very good for you. Okay. So, but yeah, going back to what I was saying earlier, a lot of people will ask me, well, how much money do I have to make to buy a $500,000 home? And if I want to buy in Texas or I want to buy in Florida, what does my income need to be? So I want to kind of talk about, a $300,000 home and a $700,000 home and then $1 million home, what the incomes normally have to look like. And Texas and Florida are somewhat similar. The property taxes are a little bit higher in Texas than they are in Florida. But some of the areas in Florida, the home prices are higher. And some of them have very expensive HOAs, depending if you're buying a condo or wherever if it's a very desired area, it could also kind of offset the higher taxes in Texas. So for a $300,000 home, generally what I tell people is you need to really be making 3 to 4 times the amount of income than what the home price is going to be. So what does that mean? That means that, okay, if you're buying a $300,000 home, okay, so, and that the payment is going to be, $2,400 a month, because we said for every $100,000, use $800. So if it's a $2,400 a month payment, and I said your income needs to be 3 times that amount, how much do you think that your income needs to be? So if the payment for a $300,000 house is $2,400 times 3, that's $7,200 a month. So you need to be making at least minimum $7,200 a month income to purchase a $300,000 home. Okay? So do the same thing on a $700,000 house. A $700,000 home, and when I'm saying, I'm talking about your total payment with your property taxes and your insurance on a $700,000 home is going to be about $5,000 to $5,500 a month. So if it's $5,000 to $5,500 a month for a $700,000 house, and your income needs to be 3 times that, then you need to be making about $16,000 a month minimum to purchase a $700,000 home. On a $1 million house, okay, on a $1 million home, but the property taxes, the insurance, everything out the door is going to be about $7,000, $8,000 a month. So you have to be making about $24,000 a month income to be able to purchase minimum for a $1 million home. This is important because when you go to get your loan, they're going to be looking at your debt to income ratio, so you can know in advance how much income you have to qualify for the loan. Okay. Now these are not specific to your situation. I'm giving you very general guidelines and criteria for qualification. It obviously varies drastically per person, per the location, type of home, all that stuff. So don't take this as a literal that you have to be making this much money to get this. There's the other variables that go into it, but this will kind of give you a general idea, because let's say you want $1 million house, and you saw on my show that you have to be making, $250,000 a year, and you make $100,000 a year, you're not going to be in the ballpark. Okay, it's just not going to happen. If you're making $100,000 a year and you want $1 million home, it's not going to happen. So lender will not approve that because the income doesn't make sense for the type of loan that you're asking for. And it's not my rule, it's just how it works. Okay, So same thing if you want to buy a $300,000 house and you saw that, hey, you got to be making $7,000 a month. If you're making $3,000 a month, you will not be able to buy a $300,000 home. This is just how it works. You're going to have to get more income or get a co-signer or get something else. So yes, you could do a 203K. There's rehab loans. Yeah, those are great ideas, Sandra. You can do a FHA 203K. You can also do a conventional home style loan. We offer those programs. So please reach out to us. We'd love to help you with a conventional rehab loan or an FHA rehab loan. We offer both of those products and we'd be very happy to help you with them if we can. We offer all different types of loans. We do FHA, we do VA, USDA, conventional, doctor loans, HELOCs, commercial, hard money, no doc loans, blanket loans, construction loans, land loans, doctor loans. All these different products to be able to help you guys. 100% financing, conventional. We have a construction loan almost up to $1 million with 5% down. Our equity builder loan program now at up to $975,000 with 100% financing. So we'd definitely love to help you, to guide you and walk you along the way to get you into your home, get you the funding the best that we can. So we appreciate all of you guys, always watching the show on the channel. So we have Monday, Wednesday, Friday, Saturday, we release new YouTube videos. We do our talk with Angelo every Thursday, 6 p.m. Central. So we're here to educate you, empower you, give you the information, the knowledge on the programs that are out there so you're aware of the funding opportunities, because there's so much information out there, especially online with YouTube and social media and Instagram. You got to make sure that you're getting the right content, the right information, so you're educated. Because you got to make sure you're making the right decision. So interest rates right now, they're starting around 5.5% for loans for 30 and 40 years. Yes, when you do a co-signer, they also check the co-signer's credit, and the co-signer's credit income does matter. So those are great questions. So I appreciate all of you guys watching this. Remember, also, if you guys give us a 5-star review on Google, if you go to Angelo Christian Mortgage, we'll hook you up and give you a free Amazon gift card. Don't forget, go to Angelo Christian Mortgage and give us a 5-star review, or 4. Hope is 5 stars. If it's 4 stars, I'll take that too. But give us a happy review and we'll hook you up with a free Amazon gift card. Don't be a stranger. Go to Angelo Christian Mortgage on Google and you leave us a happy review. We'll email you over an Amazon gift card. And also, we do our test question every single week. Ask you the answer. If you answer it right, you also win a free Amazon gift card. Tonight, the test question is, if you guys can remember from the beginning of the show, I asked the question, how long is a pre-approval letter good for? Who remembers, and whoever can answer that first correctly is going to win the free Amazon gift card. So I asked that earlier. So how long is a pre-approval letter good for? Whoever answers that first correctly will win the free Amazon gift card. 3 months. You got it, Sandra. Good job. So we'll hook you up with that free Amazon gift card. Pink Lady got it too. Text us. We'll send you out that free Amazon gift card. Toya, you got it too. So all 3 of you guys are winners tonight for the Amazon gift card. We appreciate you guys for watching the show and the channel. Don't forget to text us to 832-431-6331. We'll hook you up with that free Amazon gift card. Send us your email. Don't forget to go to Google to leave us that 5-star review so that way we can hook you up. And yes, you can use your VA income, Sandra, when qualifying for a loan. Any type of fixed income, like VA income, you can definitely use that to qualify, absolutely. So I appreciate all of you guys watching the show and the channel. I hope you're getting great knowledge, great content. We're here to educate you and empower you to make a difference. Thank you so much for watching Angelo Christian. We'll see you next week. Bye-bye.